Ladies and gentlemen, good day and welcome to the Mazagon Shipbuilders Limited Q2FY25 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jyoti Gupta, Research Analyst from Nirmal Bang Equities. Thank you and over to you, ma'am.
Thank you, Libby. Good evening, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all to the Q2FY25 earnings conference.
I'm so sorry to interrupt, ma'am. Your voice is breaking.
Is it clear now?
Yes, ma'am, it's clear. Can you just go through it again?
Yes. Thank you, Libby. Good evening, everyone. On behalf of Nirmal Bang Institutional Shipbuilders Management, we have with us Sri Sanjeev Singhal, Chairman.
Ms. Jyoti, I'm sorry to interrupt, but your voice is breaking.
Can we start now? Is it clear?
Yes, ma'am, it's clear.
Thank you, Radhi. Good evening, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all to the Q2FY25 earnings conference call with the Mazagon Shipbuilders Limited Management. We have with us Sri Sanjeev Singhal, Chairman and Managing Director, Additional Charge and Director Finance, Sri Biju George, Director Shipbuilding, Commander Vasudev Puranik, Retired Director Corporate Planning and Personnel, and Director Submarine and Heavy Engineering, Additional Charge. Without further ado, I request Sri Sanjeev Singhal, sir, to start with his opening comments, after which we can open the floor for question and answers. Thank you and over to you, sir.
Yeah, good afternoon and I welcome all the participants to this call and wish you all a very, very happy Diwali, which is just over. And the results we have published, the results have been consistent with our recent performance in the past 2 years. We are open to all queries which the investors and the participants may have. We can start the conference, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star at 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and congratulations for a good set of numbers. I have 2 questions. The first one is that is there any element of reversal of liquidated damages in this quarter?
So as far as this quarter is concerned, there is no reversal of any liquidated damages.
And sir, when we are expecting this reversal to happen in next quarter or when?
Yeah, 2 of our requests for submarine number 1 and submarine number 5, they are still being evaluated by the Ministry and the Indian Navy. So these 2 decisions are pending. The timelines would be difficult to assign, but we were hopeful that this would happen in the second quarter. It hasn't happened in the second quarter. We are hopeful that at least one of them should get settled in the third quarter.
And the total quantum would be around 400 crore?
Maybe around 300 crores.
Okay, that's great, sir.
100 crores is the max, depending upon what is considered attributable to MDL. So minus that would be the reversal.
Okay, got it, sir. Got it. The second question is it possible to just outline the delivery schedule of destroyers, frigates, and submarines for FY25, 26, and 27 maybe?
Right now, we are 3 projects are being executed. That is P-75 Scorpion submarines. We have already delivered 5. The 6th one is on the final stages of delivery. We were targeting October. Certain issues have cropped up, so we are addressing those issues. We expect the delivery anytime before 31st December. Similarly, for Project 15 Bravo, out of 4 destroyers, we have delivered 3. The 4th destroyer again was targeted for second quarter, but it is last minute issues are being addressed. So this also we are targeting delivery before 31st December. We are looking at delivery before 31st December. And first ship of 17 Alpha, again we are trying to deliver it by 31st December this year. So next we will be left with 3 large vessels, that is 17 Alpha, 3 frigates, which would be successively delivered in 25 and 26.
Okay.
25, 26 and 26, 27.
Thank you so much, sir. That's it from my side, and all the best.
Thank you very much. The next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yes, sir. Thanks a lot for this opportunity and congratulations on good set of numbers. So my question is on that now that we are very close to finishing the delivery of the submarines and the destroyer, could you outline for us the potential order pipeline over next 2 to 3 years? I mean, which are in the pipeline and what is the rough quantum where we are in the fray?
Yeah, I would request my Director Shipbuilding to outline with respect to the shipbuilding projects and Director Corporate Planning with respect to the submarine projects. So over to Director Shipbuilding, Mr. Biju George.
Yeah. So we have quoted for certain projects like the next generation corvette, and Navy is also right now looking at the next generation destroyers, which will take time, even it has not gone to the AON. So these are the 2 projects which are there. So then there are small naval auxiliaries, of which 17 Bravo is also a possibility, but it is not a crystallized. That is a repeat order of project 17A we are right now building. So next generation destroyers, 17 Bravo would be the big ticket items which we are looking forward. Maybe in the next 2 to 3 years, that is in the horizon, which is there. But right now, as far as the yard is concerned, we have not got any firm commitment from the Navy that is going to come to us. But Navy is considering this, and they will be processing it at the naval headquarters.
Okay, and sir, yeah, sir, I just wanted some idea about the size also, if you could share. I know the size can change, but rough, I mean, what is the quantum we are talking about here?
What we can discuss is, as far as the destroyer order is concerned, the destroyer order which we are executing currently of 4 destroyers, this is 2011 order. This was 34,000 crores. So based on this, you can estimate what would be the size of the order for next generation destroyers, which are bound to be larger, and after a period of almost 15 years. Similarly, 17 Alpha project, as far as MDL portion is concerned, 4 number of frigates. In 2015, this was 27,000 crores. So a similar or more advanced frigates, similar number. Today, what would be the value? This is, we leave it to your estimate.
Okay, sir, that's helpful.
With regard to the submarines, Commander Chronic would intervene.
Okay. We have 2-3 things that are happening. One is the project for additional submarines, wherein we are likely to get an order for 3 submarines, follow-on of this.
We are nominated for
this is Scorpion submarine. Then we have the 75I, which is where it is in a competition. We have collaborated with the German designer DKMS builder, and we have submitted a bid. That is, we have been declared as qualified for the tender, and but we are awaiting the government direction on that. And then after that, we have got a couple of other things which are in the pipeline. We have also submitted our quote, and we will get an order for constructing the air independent propulsion plugs, which are to be retrofitted on the Scorpions. So And one likely, which is just in thought process as of now, is the refits of this copying program. These are the things which can happen in the submarine.
Okay, sir. And sir, if I could check for these 3 additional Scorpion submarines for which you are nominated, what is the rough quantum of order size that we are looking at?
The AON value for this is 27,000, but this AON was obtained in 2018. So this would definitely have an element of escalation by the time and depending upon if there is what is the gap between the specifications as per RFP and finally frozen, and what the specifications were at the time of AON.
Okay. And sir, my last one on this is that obviously these are very large and complicated orders, so they could take maybe a few quarters to come to us. So in the meantime, do you foresee a period where the current large projects kind of run over and we have a slightly lesser quantum of order book to work with for 2, 3, 4 quarters? Is that a possibility, or do you see a smooth handover from current set of projects to the new set of projects so that our revenue keeps on growing without any kind of fall in between?
Yeah, so that's a good question. So between these 2 large programs, we have already taken 3 orders for the Indian Coast Guard and also 1 export orders. Put this together, if the complete contract, if it is they are executing, it is 31 ships.
So this is basically a filler. This is basically a filler for the time during which a large order may take some time to mature,
for which production is already commenced.
And in addition, we are also having the offshore projects from ONGC. Approximately 7,000, 8,000 crores worth of projects have already been approved and orders placed on us. So these are some of the initiatives which are going on parallelly.
Okay, so you don't foresee a situation where the revenue, may notice even a small dip, over next couple of years. You think that the current level of revenue will be maintained and probably even in interim we will have some growth on this base.
Yes. Because the offshore projects and the ICG projects and the export order put together will be able to almost sustain this kind of revenues.
Great.
There might be a dip, but very small. I mean, it will not be a big dip.
Okay, good to know, sir. Sir, I will come back in the queue. I have asked quite a bit of questions. I will come back in the queue. Thanks.
Thank you very much. The next question is from the line of Rahul from Aditya Birla Sun Life. Please go ahead.
Yeah, this is Rohit from Aditya Birla Sun Life. My first question is got to do with the capex plans, the big expansion plans that we have on cards. Is there any progress, any color to what exactly the capacity we are looking to add? What kind of vessels will we wish to manufacture in future? Any color on those aspects?
Yeah, so we have already appointed consultants for 2 major capex initiatives. One is recently we had acquired 15 acres of land adjunct to our existing yard. That is will be developed into a shipbuilding cum ship repair facility. So there we are intending to have a graving dry dock and other ancillary facilities which can develop for both shipbuilding and ship repairs, where the envisaged dock size is approximately 180 meters by around 60 meters of width. Now, we also have a land parcel very close to the Nava region near the JNPT, which is approximately 40 acres of land. That area also we have appointed the consultant for development of that area with a graving dry dock, hard stands, etc. There we can build very large vessels, because there also we are envisaging a very long dry dock of a very huge capacity.
Sir, if I understand in a very, from the way we understand it, like the number of platforms you could concurrently work is 21 currently. Once this capex happens, how many platforms you can work concurrently?
So these capex will come to fruition. It will, because there is environmental clearance, there is civil works. It will take a minimum of 4 to 5 years from now for making it operational. So then once it is becoming operational, we will be able to build very large size vessels. For example, the hard scans will be there where we can take around 8 vessels simultaneously. And this dry docking can be used for ship repairs, which can turn around a number of ships for repair and refit. That would be the kind of operations that we are envisaging.
Right now, we can, with the existing yard capacity, we can handle 11 submarines and 10 warships at various stages of construction. So with the additional capex, the capacity would be practically doubling, not only doubling in terms of numbers, in terms of size of the vessels also. Much larger vessels we will be able to handle.
So just to understand, 10 plus 11, 10 is warship, 11 submarines, and additional will be ships only, nothing on submarine front.
Submarines, whatever infrastructure is being created further, this is being created for large size ships. And as per the requirement, whatever submarines are required, that can be handled with the same infrastructure. Because submarines are completely smaller in dimension.
Got it. So, but do we P75 add-on submarine? Earlier under the cost marking stage where we have submitted the cost to, I believe, the Indian Navy, what exactly is the further progress over there?
Our voice is breaking. We are not able to get you.
So the 3 submarines.
I'm sorry to interrupt, Mr. Rohit, but your voice is breaking.
Can you hear me now?
Yep. Please continue.
Yeah, so my question is more on the cost benchmarking stage of P75, the 3 add-on submarines. We have submitted the, I believe, the quote or the cost benchmarking parameters to the Indian Navy. What exactly the stage are we currently? I mean, when do you expect this to see a final conclusion of our order?
This can happen anytime. We don't have any official intimation with regard to completion of costing committee approvals. They do not come to us. It is internal to the ministry. So it can happen anytime. What happened till now?
Got it, sir. Thank you. That's it from my side.
Thank you very much. The next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yeah, sir, thanks a lot for the opportunity again. So, sir, my question is on, obviously you have been doing quite well on margins. So the current full year margin, say on a trailing 12-month basis, I mean, do you expect to maintain it over next couple of years? Because these margins are anyways on the higher side. So can these margins be maintained, or we are looking at some kind of decline from here?
The normalized margin for our industry would be something around 12 to 15%.
Okay, so you mean at the EBITDA level or at the PBT level?
At PBT.
12 to 15% PBT level. Okay, and would you be able to comment on the EBITDA level margin? Is that something you kind of mention or track?
So primarily we are focused on the PBT.
Okay, okay. But the PBT would also include some other income that you earn on your cash balance. So these margins are including that, you mean?
Yeah.
Okay. Okay. And so my last question is on your capacity expansion plan. And, so, and this is a slightly futuristic question. So, I mean, as, I can see it as of now, you are completing some of the very large projects right now. And obviously a few large projects are in the pipeline, but they may come with some delay. So you anyways have enough and probably more than enough capacity, like 11 submarines being built simultaneously and 10 warship. So, I mean, does this capacity expansion plan indicate to us that you are expecting even more orders in the future beyond whatever you have outlined in your answers so far? Because your capacity will go.
Definitely.
Okay.
We are looking for export orders. We are looking for commercial. And we are looking for repairs of large vessels, which currently yard is not in a position to undertake.
So there is domestic defense orders, then domestic commercial, export defense, and export commercial. These four segments will be there for new build as well as for repairs.
Okay, but I believe, sir, as of now, I mean, your non-defense work is pretty small, right? I mean, not too big in overall scheme of things, but you expect it to grow much faster from here onwards.
We have the capability. If we have additional capacity, we can scale it up.
Okay, but in terms of like tapping into that market, are you in active discussion with clients, or you are still in very initial stages? Could you comment on where we are in that journey? I mean, how quickly we could see some orders being, won on non-defense side?
On non-defense side, if we have to take right now, we have to outsource it completely, because right now our capacity for commercial shipbuilding is almost full. So once the new facilities come up, that is, as I told, maybe 4 to 5 years down the line, then we will have captive capacity for taking these vessels and executing it on our own.
Non-defense has offshore also.
Yeah.
We have made good progress there.
Okay, sir. Okay, sir. Thank you. Thanks a lot.
Thank you very much. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, I hope I'm audible, sir.
Yeah, please continue.
Yeah. Yes, sir. First question is on the operating cash flow. I mean, if I look at the first half operating cash flow this year, it's negative. If I remember correctly, negative 300 odd, rather 180 odd crores versus a positive 300 odd or more crores in the same period last year. Can you elaborate on that?
These are non-consequential. As far as the cash flows are concerned, by the end of the year, my debtors do not go up. So these will even out. So negative cash flows, we have a significant cash balance available.
Okay.
These negative cash flows are naval orders primarily, so there could be some delay, intermittent delays in realizing payments.
Okay. All right. And sir, out of the total capacity of doing 21 platforms concurrently, how many are you currently executing? Is it possible to give some idea on that?
Currently, we are executing 6 large platforms and some smaller vessels.
Yeah, so 21 vessels for Indian Coast Guard and 10 vessels. So right now we've taken up 6 vessels for export orders.
Okay, all right. Third one, Goa Shipyard has a very sizable increase in order flow. Their annual report talks of a good execution, of a good growth execution in the coming 2-3 years. Is it therefore a reasonable surmise to believe that your associate income that comes from the Goa Shipyard will also grow at a very healthy clip in the next 2-3 years?
We are not participating in the management of shipyard. Primarily, we receive the dividend, and as far as the consolidated accounts are, yes, part of their profit is considered by consolidated accounts. If shipyard performs good, definitely it has an impact on my consolidated accounts as well.
Right, sir. And sir, final one on the project P75I, where you are bidding with TKMS. First part of the question: when do you see the final decision? I mean, any possible idea for the timeline to be given by you? And second one, I think if I have understood it correctly from media articles, TKMS was able to demonstrate a functional AIP on their 212 platform, whereas Navantia and L&T have not been able to demonstrate a functional working AIP yet. Is that true? And if so, is it reasonably logical to believe that the TKMS platform, has demonstrated requirements or ASQRs of the Navy better?
We only have information that as far as MDL, TKMS is concerned, this has been evaluated, and whatever evaluations were to be performed, all those have been successful. Regarding balance for any other thing, we are not privy to that information. We will not be able to comment on that, including the timelines.
All right. And for the air independent propulsion, which DRDO has designed and which is to be put on the existing submarine fleet, the existing diesel electric submarine fleet, is there again any RFP or RFI in the works in the near future, or is this something far ahead in the future from your perspective?
So this is expected any time. We have given the budgetary and RFP has been issued. Navy is trying to introduce AIP during the first refit of the first submarine, which is expected in 25. In case it doesn't happen in the first submarine, then definitely for the second submarine. So first submarine, a normal refit can be there without the AIP. Second submarine, along with AIP.
A normal refit, if I sort of go back to your statements of the last call, a normal refit on an average works up to a third of the value of the initial order value of the submarine. With the addition of AIP, how much incremental value gets added, to the refit?
Another 30-35%.
Another 30-35%. Okay. So basically, if a refit with an AIP comes in, it's reasonable to assume that the total refit value would be around roughly 65 to 70% of the original order value. Is that?
We will peg it at around 55-60%.
Okay. All right, sir. And again, going back to your,
these are very rough estimates.
Yes, sir. I completely understand that, sir. I completely understand that.
Static. This would be very dynamic figure.
Yeah, agreed. And on your statements in the previous calls or previous couple of calls that as and when orders come closer to their final deliveries, there is you get a better and a more clearer view of your costs, and therefore, like you did in 1Q, there was, as you indicated, cost came in lower than what you had originally budgeted and led to a margin expansion. Have you seen something of that sort in 2Q as well, and is it expected in the second half also?
Depends upon, we have a delivery planned, 2 deliveries are planned this year. When the deliveries are done, at that point of time only we will be able to take a stock of how it has panned out.
All right. Okay, sir. That's all from my side. And one final one is on commercial shipbuilding. There is a lot of policy emphasis on building, commercial ships under the India flag, with incentives, current set of incentives being extended further down the line, with additional incentives also in the works, in the pipeline. And there's also a lot of work emphasis on, green shipping or hybrid shipping, both in Europe as well as India. Do you therefore see yourself actively participating? Is that a large addressable market for you, and one where you would be interested in participating in a big way?
Yeah, see, the order which we are right now having with a European client, with a Denmark client, is already a hybrid. So the financial assistance is now getting revised. That benefit also in the future. For example, if it's a fully green, there is a 30% incentive which the government is going to give. So this green market and short sea shipping market is well alive in Europe, and they are looking to this side of the world also. A lot of shipyards already have received orders from Europe in the country.
Yeah, I understand that, sir, but from your perspective, specifically from Mazagon's perspective, do you see, these as being material-sized opportunities and one where you would want to participate actively?
It's provided, because most of the clients would like prices which is not worth.
Hello?
Yeah. So if it becomes profitable proposition, we will definitely look at it.
As per your peer, they are very profitable. Cochin Shipyard seems to indicate the profitability on those is actually better.
But not all clients are inclined to give like that.
Okay. All right, sir. I'll get back in the queue for more. Thanks for taking my questions.
Thank you very much. The next question is from the line of Abhishek Poddar from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Thanks for taking my question. Sir, first regarding the PBT margin that you guided of 12 to 15%, just trying to understand it a little more. So if I look at FY22, this number comes to 13 and 23 was 18%, but 24 was 26%. And I think you had some LD refunds in 24. First half also has been very impressive, sir. It has been about 32%. So just trying to understand how to think about the margins from here.
We have already discussed this in quite detail in the last conference call also, and we still maintain that normal project margin would be around 12 to 15%. Whatever margins you are looking at right now, these are on account of completion of projects where we have been able to complete the projects at costs lower than what was envisaged at the time of getting the project. So these certain efficiencies, which learning curves, which we have traversed, certain efficiencies, process changes, which we have done over the years. So these would be taken into consideration definitely by the customer when we negotiate for future projects. But it will always be a game depending upon what improvements we bring in further. There could be certain positives.
Okay.
In case we are not able to execute it with the same efficiency, there could be slight negative also.
Understood. So, sir, these are after the settlement with customers or certain provisions which we made in the books and we reversed it based upon our understanding of the project now?
Yeah, depending upon the completion of the project, if the costs are not incurred, then they add up to our profit as and when the ship's guaranteed effect period and default liabilities are done.
Understood. And sir, how do you foresee this, let's say in, second half of this year and 26, some more benefit could come in, or these are benefits are mostly realized and we will see normalized margin now?
I said in my previous reply just now that we are targeting 2 deliveries. So based on the deliveries, we'll be able to assess as when the deliveries actually take place and what kind of default liabilities are pending at the time of delivery.
Okay.
So that with that we would be in a better position to assess that what kind of a cost the project is finally going to end at.
Understood. So second is regarding this 3 submarine you mentioned which were the AON is approved. So once we get the order, if you can please highlight how the execution will be over how many years and how the revenue booking will happen.
The project timelines are 6 years for the first submarine and then 1 submarine each year. So this is roughly around 8 to 9 years.
Okay. And should we assume a linear revenue booking or it will be more back-ended revenue booking, sir?
No, it is always a S-curve. During the initial stages of the project, financial as well as the physical progress is a bit low. Then it is pretty steep and towards the end of the project, again, it tapers out.
Okay, understood, sir. Thanks. And so just one last question on P75I. Any clarity, sir, whether it will go to one bidder only, or is there a possibility of consideration of the second bidder also in the same contract?
Whosoever gets the order, he gets the complete order for 6 submarines.
Okay. Okay. Thanks, sir. Thanks a lot for taking my questions.
Thank you very much. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, thanks for taking my question again, sir. On continuing on the P75I, while you know the TKMS has been able to meet all technical parameters, I presume there was some concern raised on their financial situation. Do you on TKMS's financial situation, in at least in some media articles, do you see that as a matter of concern, or if at all there has been a concern around that, has that been addressed?
We are not aware of this, and nothing of as of now the collaboration is fully on track.
All right. And on the delivery schedules, you've been indicating that for frigates you're targeting 1 and possibly 2. Now that you've moved into the second half of the year, is there more clarity on whether 2 is a possibility to deliver this year?
Second is doubtful. Second may spill over the next financial year.
Okay. Right. Thanks, sir. I'll get back in the queue.
Thank you very much. The next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yeah, sir, thanks for the opportunity again. So, sir, on these 3 submarine orders for which you have been nominated, just trying to understand the revenue recognition in a little bit detail. So, actual revenue recognition that you do, it is kind of percentage of completion because these are very long, execution time projects, or you have to deliver the submarine and then only you book revenue. How does it happen as the execution progresses?
Percentage completion.
Percentage completion. Okay. And is there a cutoff of completion before which you do not recognize any profit on the project? Is there some kind of cutoff, or you start recognizing the profit on the project from the very beginning?
Yeah, we start recognizing the profit right from the beginning itself, depending upon what is the cost of completion, estimated cost of completion.
Okay. And that percentage completion you follow in all your shipbuilding and submarine building projects. There is no other revenue recognition, right? Method.
Oh, considering the gestation period, until it's a small repair project, that is different. But for any new build programs are fairly long.
Okay. Okay, so, sir. Great.
Completion.
Great, sir. Thank you. Thanks a lot, sir, for your answers.
Thank you very much. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question again, sir. Just one follow-up. We have 3 deliveries scheduled by end of December. Is it possible to highlight whether these are ahead of schedule or as per schedule?
As far as submarine is concerned, submarine is as per the schedule. As far as 15 Bravo destroyer is concerned, 15 Bravo destroyer, if it happens prior to 31st December, this would be ahead of schedule. 17 Alpha, slight delay is there, which is beyond control. We are already in discussion with the Indian Navy. Once the delivery is made, then we will be requesting Navy to revisit the timelines and seek concession or extension of the time.
Okay, so this destroyer is how many months ahead of schedule, sir? If it happens before 31st December?
Roughly 2 months.
By? Sorry?
Roughly 2 months.
Okay.
Great, sir. Thank you so much.
Thank you very much. The next question is from the line of Jyoti Gupta from Nirmal Bang Equities. Please go ahead.
Thank you so much for the opportunity. So my question is, these 3 deliveries that are going to happen, how much percentage of the revenue has already been realized? Is it 90%? So which means only 10% will now be reflected in the next 2 quarters, or is it 75% till now that the company has realized?
Basically, it is not dependent on the ship only.
Yeah, we have post-delivery, we have warranty of. Yeah, then the spares also have to be procured and given. Warranty obligations are there. The ship will join the fleet immediately after commissioning. So during the operation of the ship, during the guarantee period, if something wears off, tears off, we need to replace it, repair it, replenish it. All these liabilities are also there. So
we have for mod is also there.
Yeah. So then during the before completion of our guarantee obligation, we have to dry dock the ship once and inspect all the machinery, propulsion systems, etc., and make good of any deficiency if it is there, also deficiency if it is there. So all this have to be factored in while booking the entire revenues. Basically, what I meant to say that at delivery, the entire revenue will not get exhausted. There is further expenditure also which is involved.
Okay. Okay. So my next question is then the expenditure that we have had. I mean, we've seen that since the costing is based on 2011, based on 2011, and the new upcoming ones will be in 2016. Of course, the escalation for a 27 could become to 32. My next question is, will the raw material cost, obviously, since we're looking at a horizon of 6 years, and the cost that we would have, apart from revenue, we would have also allocated some cost escalation as well. So, and with indigenization as well, don't you think that your cost of material will actually go down for the next projects?
Whatever factors you are discussing, these factors are known to the customer also. So the value which is negotiated, that would be taking these aspects into consideration.
Okay. All right. Okay. And so there is this, build-up of some procurement of base and depot, and I also see some, other expenses which are project-related, which I've specifically seen happens only in the second quarter of every year. What kind of these expenses are? Are these preliminary or something to do with evaluation or survey-related? Could you please explain this?
I'm not really very sure what expenditure you are talking of, which happens only in second quarter, because we are not aware of any specific expenditure which is happening specifically in second quarter every year. I don't think any such expenditure is there. Except for some.
So there are expenses, other expenses which are project related. What projects are we talking about here?
It is for all the projects. Each of these is a project. P75I Scorpion, this is a project. 15 Bravo Destroyers, this is a project. 17 Alpha, this is a project. All these are projects. The project-related expenditure, this may be the heading in the accounts. Okay. Based on granularity basis, this would be assigned to different projects. Any of these projects would have utilized certain expenditures, but by design there is nothing in a particular quarter every year some particular expenditure is happening. Nothing by design.
Okay. Okay. Thank you so much. I'll come back in the queue.
Thank you very much. The next question is from the line of Kavyan Shah, who is an individual investor. Please go ahead.
Audible? Hello?
Yes, please continue.
Yeah. So I have a follow-up question on someone who just talked about the incentive schemes and all which the government has launched. So I needed to know that if these schemes are beneficial, and have you till now received any reimbursement or incentives or any financial assistance for the same?
So these incentives, first of all, are not applicable for platforms which are having weapons. Now, our big ticket orders are all having weapons. These are all combat platforms. So this financial assistance or that incentives are not applicable to us per se. Now, when it comes to the commercial ships, at this moment of time, our order value is significantly much lower in comparison to the major warship and submarine projects which we are handling. So, not only that, this assistance will be available to us only on successful completion of the project, that too within the time frame of 3 years. So, we have not reached there. So, right now, that is not going to make any significant difference to either our top line nor to the bottom line.
Okay, okay. Thank you so much.
Thank you very much. The next question is from the line of Rao Thakkar from NVS Brokerage. Please go ahead.
Yeah. Thank you for the opportunity. So you have mentioned that the normal margin in this business is 12 to 15%, but for the quarter you have posted higher margins. So, sir, for H2, do we go with 12 to 15% or do we go with the margins you have posted, sir? Because since higher value-added products, you post better margins.
What is your core query for future?
So for H2, you had mentioned for normal value products, the PBT margin is 12 to 15%, but you have posted higher margins. So for the second half, sir, do we go with the H1 margins you have posted or better margins?
As far as H2 is concerned, H2 would be similar to H1 only. We don't expect a significant change because this is based on the current projects.
Correct. Correct.
So 12 to 15% margin is applicable to what?
For new projects.
Acha, for new projects. Okay. Okay. So whatever you have been doing, H2, you will be able to do the same thing. But going forward, then we will have to see that whether the margins could be similar or it could be tapering off, to 12 to 15% as you have suggested.
Margins can be different because the project mix would be different. Right now, I'm executing 3 projects, 75, 15 Bravo, and 17 Alpha. This financial year, it will be 17 Alpha only.
Okay.
So we have that the project mix would be different.
All right. All right. Understood, sir. Understood. Thank you. Thank you very much.
Thank you very much. The next question is from the line of Shivam Parak from ValueWise Wealth Management. Please go ahead.
Hi, sir. Thanks for the opportunity. I wanted to know the split between our cash and cash equivalents, that is the free cash and the advance. And second question was of the estimated revenue outlook, if you could provide some numbers on the revenue front for the year, financial year 24-25.
We are indicated we are looking at a growth of around 10%, 10 to 12% over last year, as far as the top line is concerned. And as far as the cash is concerned, we are having our own cash around 4,000 crores.
Okay. And sir, the advances from the Indian Navy?
Balance, whatever is reflected in the accounts is pertaining to Indian.
Okay. So, sir, around 200 rupees of free cash is with the company. So, the company has a profitable business. So, the free cash will be generated year over year. So, does the company foresee any special dividend or any bonus in future for the investors?
For CapEx plans, we propose to invest around 5,000 crores over next couple of. We have already placed the orders for the consultancy for these large CapEx plans.
Okay.
We begin fully utilizing this cash balance for capacity enhancement.
Okay, capacity. Thank you, sir. Thanks for addressing my queries.
Thank you very much. The next question is from the line of Sachin Manya from 3P Investment Managers. Please go ahead.
Hi, sir. Good evening. So just one clarification I need on this ONGC order of 6,000 to 7,000 crores you referred to. What will be the timeline for this order for execution?
2 years.
So you would be booking, almost 3,000 crores over next 2 years for 25 and 26?
Yes.
Okay. And how about the margins on this product? You said 12 to 15%. It will be similar to that or it will be lower on this account?
It will also depend upon the mix because these are 3 different projects. Each one of them has a different margin. But definitely, yeah, something around 10 to 12%.
Okay, 10 to 12. Thanks, sir. Thanks, sir. That's it from my side.
Thank you very much. Participants, you may press star and 1 to ask a question.
Okay, I think we are done.
The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Thanks. So just want to confirm, when you indicated on schedule and delays, were you referring to destroyer is ahead of schedule in deliveries currently and frigates are delayed, or is it the reverse? I am sorry, I couldn't follow that.
Ahead of schedule. Destroyer is ahead of schedule.
Destroyer is ahead of schedule. Right. And sir, in terms of margins, I think apart from the revision in costs towards the finalization or final delivery of projects, you also indicated that if you're able to deliver ahead of schedule, that also creates certain cost efficiencies. So potentially between LDs, one possible delivery ahead of schedule and also some potential cost revisions. Is it therefore reasonable to assume that you have enough margin levers to perhaps sustain the kind of margins you have demonstrated in the first half of the year?
For S2, yes.
Okay.
Thank you very much. The next question is from the line of Rakesh, who is an individual investor. Please go ahead.
Hello. Thank you for the opportunity.
I'm sorry to interrupt, sir, but your voice is not audible.
Hello.
Sir, can you speak a little louder?
Hello. Able to hear me? Hello.
Not very audible.
Sir, able to hear me now?
Yes.
Yeah. Sir, thank you. Thanks for the opportunity. In terms of the expense, the cost of material and also the procurement, whatever the material which is the costing now, that can be used only for this quarter, or that can be same material can be used for the different quarter also? Because what I see is that procurement base and the depot spare cost, it's gone high, right, in this quarter. That's the question.
Basically, whatever cost booking is there, it is all based on consumption. So whatever activities are carried out during a quarter, only those costs are booked. With regard to procurement, majority of the equipments for these projects have already been procured. So not much of an impact with respect to any change or fluctuation in the prices in the market.
Okay, sir. Thanks for the clarification.
Thank you very much. The next question is from the line of Anirudh Murarka from Continental AG. Please go ahead.
Sir, am I audible?
Yes, please go on.
Yeah, I wanted to inquire that the cash balance remaining with the company cash on books, how we are currently using it, with some sort of fixed deposits, and how much interest is being fetched right now?
Right now it is fixed deposits.
At what rate of interest, sir? It's a long-term deposits or it's a liquid deposit?
Liquid deposits, 1 year max maturity, 1 year.
Thank you, sir. Congratulations once again for a beautiful set of numbers.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Ms. Jyoti Gupta for closing comments. Thank you, and over to you, ma'am.
Thank you, Riddhi. On behalf of Nirmal Bang Institutional Equities, I would like to thank the management of Mazagon Shipbuilders Limited for the call, and many thanks to the participants for joining the call. Riddhi, you may now close the call. Thank you so much, sir, for your time.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay. Thank you.